Folks, Michael Zuber, one rental at a time. I want to give a special shout out to Lance Lambert, who is somebody I've had on this channel, somebody who is a great follow on. Excuse me. Sorry about that. God bless me. Again, one more time. Lance Lambert, great follow on Twitter. He put out a series of tweets yesterday talking about the housing crash by the numbers. He did give full credit to the source, which we do here as well. A lot of this data came from Zillow. There's a lot of data in this. We're going to talk about 8 cities. We're going to talk about Dallas, Austin, Miami, Atlanta, Phoenix, Tampa, Columbus, and Sacramento. What we are going to talk about, folks, is housing tiers, right? We have to understand the data so we can interpret what we think is going on. So inside each of these 8 cities, as you should probably know and expect, they all have different median home prices. Okay? So what we're about to go through in these just horrible crash-like numbers is based on each city's median home price, okay? The Columbus median home price is not Sacramento. Sacramento is not Austin, so on and so forth. So what you will see, again, Lance Lambert, editor at Fortune, sourcing from Zillow, is tiers. There is the low tier, which is 0 to 35% of area median. So for example, if your median home price was $1 million, 35% of that would be $350,000. So it's definitely first-time home buyer. That's how I look at these numbers, right? For me, low is first-time home buyers, and this is going to become important. This is what I'm talking about when I talk about a housing crash, understanding what may or may not happen to median home price. Next, mid, from 35% to 65%. To me, for this general discussion, that is the move up buyer, right? And then the high end, or what we will call luxury here, 65% or higher, right? So again, we have first time home buyer, move up buyer, luxury buyer. We are going to talk about those 3, tiers across 8 markets. So let's get into it. Let's talk about it. So we are going to talk about tier 1, 2, and 3. You know what? Let's just use my vocabulary, just so we stay consistent. So this is first-time home buyer, this is move up, and this is luxury. Right? This is important. This is basically trying to figure out what is happening in our markets. And again, you should be looking at your buy box, your area, look at it daily, all of that good stuff. So again, the first-time home buyers in Dallas, down 11.2%. Again, folks, these are transactions, or what is called sales. So sales to first-time home buyers in Dallas, Texas, are down 11.2% in June. What about the move-up buyer? Remember, when you watch my channel, I have said and often repeated, the move-up buyer is dead. Well, what does the data look like? Well, move-up buyer down 19%. And again, folks, we have to remember this is June data. This is June. Why is June important? Because June was the month that the average mortgage rate went over 6%. Why is June important? Because I believe mortgage rates are already over 6% and on the path to 7%. So understanding what happened in June might give us color for what happens the rest of the year. I do not have a good feeling. This epic crash in housing transactions is going to get worse. So what about the high end? There's been a lot of people who have said The high-end buyer, the luxury buyer, not impacted. They're the cash buyers that we hear about all the time. Well, folks, even luxury buyers, at least in Dallas, Texas, are impacted by higher rates. They were down 25.9%. So that's Dallas. Let's look over at their sister city, Austin. Austin, to me, as an outsider, somebody who has never, ever looked at Austin, it feels to me like Austin is the hottest of hot markets in Texas. Texas is all kinds of hot, but what about Austin specifically? Well, first-time home buyers in Austin, Texas are down 13.3%. Move up down 22.5%. Oh, I already did that. Whatever. And then down 32%. That's a heck of a drop. 32% for the luxury market. Again, Austin's expensive. You got all these Californians and whatnots moving there. Think about that. That is 1/3 of the luxury business in Austin, Texas, crashed in 1 month. Pretty crazy. How about Miami? Talk about a hot market. What is going on in Miami? Well, still down. First-time home buyers down 8.2%. Move-up buyers down 16.9%. And luxury 29.6%. Again, folks, full credit to Lance Lambert. He put this out on Twitter. You can go to his Twitter feed, follow it, see what's going on, see all the information. Let's go out to Atlanta. First-time home buyers only down 2.4%. Middle down 8.3%. And the high end down 19.5%. So if we look at these four markets, again, completely outsider, somebody who's not looked at any of these markets, Atlanta is the one that is the least hot, right? I hear about Austin. I hear about Miami. I hear about Dallas. Check out Austin. Looks like first-time home buyers are still doing okay in Austin. Move-up buyers, right, down 8%. But the luxury market is getting hit. What we see across all of these is the luxury market is getting hit the worst. So higher rates matter. The luxury market is getting whacked. And again, what do I think is going on? I actually think this is just the move-up buyer. The move-up buyer, right? They're staying put. They're not moving. Move-up buyers sell one, buy one. They're not going up. But let's continue because we got four more to go through. What about Phoenix? How many times have we talked about Phoenix on this market? Open Doors got like 2,300 listings. Just going crazy. Phoenix, Arizona, same idea. First-time home buyer, move-up buyer, luxury. Down 18.1%. Oh, I'm sorry, 18.2%. This is first-time home buyer. This is move-up. This is luxury. This is different. This is the first time that happened. We'll talk about that in a minute. And then luxury is down. This is the first time. This is the fifth city and the first time this happened. The middle, the move-up buyer is down the least. Or I'm sorry. Yeah, it is. It's down the least. First-time home buyers down 18. Move-up down 14. Luxury down 23. Something's going on in Phoenix. Maybe this is Open Door selling off inventory. In fact, that's probably exactly what it is. Open Door, who is a forced seller, is selling off this move-up market. Again, remember, 35% to 65% of area median average. So interesting to look at. Tampa. Let's look at Tampa, another hot market. Oh, I need to get a new color. This is the first time this happened. Tampa is positive 1.5%. So first-time home buyers in Tampa actually up. Pretty interesting. Move-up buyers down 11.4%. And luxury down 23.6%. Again, that's the first time we've seen that. This is up 1.5%. Shout out to the folks in Tampa. How about Columbus? Columbus down 5.1%. Again, I need a new color. Plus 5.6%. I get that right? Yep. And then down 5.1%. And then let's just round it out with Sacramento. Down 22.6, down 19.9, and down 36.7. So a couple of things to note, right? This is stuff we need to think about. First, of all these markets, Columbus is different, right? You and I have probably heard about Austin and Miami and Sacramento and Phoenix, just hot markets. Columbus, Ohio, not a market at least I have heard about as a bubble market. Maybe you have, but I haven't. Look at that. Columbus has the least down in transactions. It actually is the only market that is up for move-up buyers. My guess, and again, these are just guesses, is people are moving to Columbus. They are taking their quote-unquote bags full of money, and they are buying in Columbus. I don't know that for sure. That is just my guess. If you invest in Columbus, Ohio, please leave a comment below. I would love to hear from you. The other thing to look at, again, is the trend, right? Tampa was one of two markets with an up number. Tampa's first-time home buyers up. Columbus, move-up buyers up. Sacramento, first-time home buyers hurt. Move-up buyers, not quite as much. Is that just a repricing of Sacramento? Don't know. Luxury hurt across the board. Why could luxury be hurt? Well, luxury buyers, in my experience, often are, quote unquote, the wealthiest. Shocking. But they often have the largest stock portfolios. Maybe they invested in crypto or NFTs or something else. They don't feel as rich. They don't feel as confident. They don't want to buy in cash. This is also obviously, again, remember this is June data. A 6% interest rate, if you don't know the math, hurts the most on the largest loan. So there's a lot going on here, but clearly every market is suffering from higher rates. Transactions, what was the highest drop in transactions? Wow, look at Sacramento, down 36%. We had Austin, Texas, down 32% in the luxury market. How about the move-up market? Move-up market, wow, Austin got hit again. 22.5%, largest drop in the move-up market. The best market was Columbus with a plus 5%, 5.6. First-time home buyers, Sacramento. Woo! Sacramento and Phoenix. Largest drop for first-time home buyers, 22% and 18%. The best, of course, being Tampa. Special shout out one more time to Lance Lambert, who has been a guest on my channel. Please follow him on Twitter. He is an editor at Fortune magazine. Again, all this data is sourced from Zillow. Pretty interesting to watch. It's pretty interesting to watch. And again, if you follow my channel, you know I think rates are going to 7%. So again, if this happened at 6%, what kind of crash numbers are we going to see at 7%? I think transactions are going to go down across the board, every segment. The Fed broke housing. It's going to take years to unpack this. Supply destruction is worse and not talked about enough. People don't have to sell. They try to sell. They don't get the price. They stay put. You are going to hear even empty nesters who live in 3,000 square foot homes all by themselves. they are going to start to say, you know what? I'll stay put one more year. I'll sell next year. I'll sell when it's a better market. The supply destruction because of the Federal Reserve and the low interest rate loans, which is now a family's best asset. Yes, folks, the 3% mortgage is an asset. In a world of 7% mortgages, the 3% mortgage is an asset. In a world of 5, 6, 7% inflation, a 3% mortgage is an asset. The Fed broke housing. If you are in the real estate business, it's going to get worse. We are already down 20, 25, 30%. Get ready for a 50% decline in the real estate commissions, inspections, transactions. If you are an investor, let's close on a high note. If you are an investor, you should be getting excited. Do the work, look every day, find the motivated sellers, get closing cost credit, get rate buy downs, ask for the moon. Folks, it is clearly crumbling. The housing slowdown is real, as we have talked about many, many times. I would call this a crash without question. It is what we have been talking about on this channel, and we have called for months. So I feel pretty good about this. All right, folks, we will do the daily financial news shortly. It is Friday, September 2nd. Have an amazing day. It is Labor Day weekend, if I am not mistaken, which I think is a 3-day weekend for most of you. Enjoy it. Have fun. Don't forget to look at your buy box. Don't forget to track what's going on. Bye.